We are in a bull run. Nifty has rallied almost 18% in the last few months, and everywhere you look, market is throwing a party. Your portfolio is glowing green. Your friends are talking about their latest multi-baggers, and the Nifty, it is at an all-time high. And during this time, many of the stocks have given amazing returns. IDFC First Bank 50% up, Bajaj Finance 61% up, Geo Finance 45% up, and BSC, that stock gave almost 100% returns. And in the middle of this bull run, a little voice of greed has started whispering in the investor's head. Nifty is at an all-time high and it has also started falling in the last few days. So what if we just sell everything now, lock in our profits and buy back when everything comes crashing down? Sounds like a genius move, right? The perfect strategy. But is it? So to answer this question, I thought of making a quick video and analyze the market and the bull run. So watch this video very carefully. You will get a clear understanding about the market and what to do next. Everything will be taught fundamentally, so please take notes. And this is a humble request from my side that if you don't have time to watch the entire video now, then please don't watch it. Save it and watch it later, because this is a very important video for all of the investors and it deserves your time. Now, the idea of selling at the absolute top and buying back at the absolute bottom is the biggest illusion in the stock market. It's a trap, and honestly, you are going to be terrible at it. I know it sounds harsh, but let me tell you a quick story. I know some of my friends who back during the 2024 elections were convinced that the market is going to crash. And once they saw Nifty near 22,000, they sold everything. And now they're still waiting, still sitting on cash, watching from the sidelines as the market rallied from 22,000 to 26,000. So they did not just miss the gains, they lost an amazing opportunity. They played a game they could not win. So the number one rule that we need to burn into our minds is this: you cannot time the market. That's it. Don't even try. And if you truly believe that we are in a long-term bull run, then a little bit of volatility, a 5 to 10% dip from here is completely 100% okay. And that is how you will make money. So if we are not selling, then what's the game plan? For that, we need to zoom out. Now, Nifty has been consolidating from the last 6 months and moving in a sideways, tight range. But look closer. Now, this is a classic cup and handle pattern, a powerful signal that technical analysts watch very closely. So, the top of this pattern, around 26,277, is our major resistance. Think of it like a ceiling. Now, the logic here is simple but beautiful. So if Nifty breaks through the ceiling, then the pattern suggests a potential target. Now we take the depth of the cup and project it upwards. So that gives us a technical target of roughly 29,241 over the next 1 or 2 years. And as I'm filming this video right now, we are at 25,500. So does it really make sense to sell our ticket right before the train leaves the station? No, right? So in short, do not leave the bull run in between. It is not a seller's market, it is a strategist market. And these are the exact kind of strategies we make at Rangavan Finance for different phases of the market. Okay, so we don't sell, but does that mean we go all in? Do we throw all of our savings in the market right now near all-time high? No, we don't buy a lot, we buy smartly. So let me explain you why this happens and the logic behind this statement. So if you take a look at the long-term chart of Nifty, you will notice the red zones that I have marked. Now these are the major falling phases in the market. And you know what? These are the exact zones where I invest the most. For example, last year the market started dipping around September. So from November to April, I went heavy on my investments. Why? Because there is a golden rule in the market that most of the people miss. You make most money when you invest during a dip. And when prices fall, your risk actually reduces because you are buying quality businesses at discounted valuations. And when the markets recover, that is when your portfolio sees the fastest growth. So now what should the investors do who want to invest their money in the market? See, I have these two strategies which one can follow. Now, the first one I call creating an opportunity fund when you do not find good opportunities in the market. And second is buying stocks which are available at good value. And yes, I am going to share some stocks with you which one can consider during this all time high in the next few minutes. And again, I am repeating this statement for you. I am bullish that the market will show a bull run. So please do not exit. So now coming back to what I was saying, that I have heard this one regret from the investors for years now. Every time the market shows a fall, that Sanika, we do not have cash to buy during the day. So our first strategy will solve this problem. So listen to me very carefully. Now this is my simple approach on how you should invest when market is trading near all-time high. Now let's say if you want to invest 10,000 rupees every month. So do not put your entire money at once. Invest 6 to 7,000 and keep 3 to 4,000 aside in the opportunity fund. Now this might go on for the next 6 months, 8 months or even a year. But keep on doing it consistently and save it in your demat account, not your bank account. Because when market shows a fall, that is exactly where your opportunity fund comes in. So when market shows a dip, you will have cash ready and you can use it to buy quality stocks without any hesitation. So now let's answer the question. Where do we put that 6,000 rupees? See, we hunt for value. We do not chase the companies that have already run up 100%. We look for great companies that the market has temporarily overlooked. For example, last year I was talking about Bajaj Finance when it was 24% down, and now it is near its all-time high. So we do not chase, we move on and we find the next opportunity. So as promised, here are the three companies where I see that kind of value today. Now the first stock is Astral, a phenomenal company available at 37% discount from its peak, and its last few quarterly results were fantastic, but the stock price has not yet caught up and the high PE is a risk. But buying the stock at a deep discount is how we manage that risk. Second is Varun Beverages, another great stock at a great value. Now a year ago it was trading at a PE of almost 100 and today that has dropped to 53. Now the business is still strong, but the valuation has become far more reasonable. So I am building positions here. And third, CAMS. In its recent quarter, the company reported its highest ever sales and profits. And the stock price, it is still available at 32% discount from its top. So the market is ignoring its performance, and that is an opportunity for us. So to bring it all together, the real money in the stock market is not made by chasing the momentum or panicking at the top or trying to perfectly time the bottom. It is made in the waiting. It is made in having the discipline to build an opportunity fund when everyone else is greedy and having the courage to deploy it when everyone else is fearful. So this was my video explaining you how a retail investor should react in current market situation. So if you liked this kind of a video, then first of all give me a thumbs up. Then let me know in the comments what you liked about it and what other kind of videos would you like me to make. So as always, this was Sanika from Rangavan Finance and I will see you very soon in the next one. Till then, bye bye.